Basic Principle of Tourist Economics, the Economic Impact, Part 1. Tourism is not just a leisure activity, it's a vital component of global economic, health, and social cohesion. In fact, if we consider the reason why people travel, demand, is it possible to observe that its multifaceted impact extends beyond the mere financial benefit, influencing cultural exchange, community development, and international relations? Tourism plays a significant role also in shaping both the economy and society of host regions. Supply. Its impact can be categorized into economic, socio-cultural, and environmental dimensions, each with positive and negative aspects. The economic relevance of tourism is quite interesting. The United Nations World Tourism Organization has estimated that in 2002 international tourism represented 2.5% of world GDP, 19% of service exports, and 1 out of 10 jobs worldwide. Moreover, even if economic indicators are still below the level registered in 2015, Eurostat has estimated that, during the recent recession, for a large number of EU member states, tourism has been a significant driver of the national economy and labor market. From the economic point of view, the impact of tourism can be either positive and negative. Positive effects are mainly to job creation, often in sectors such as hospitality, retail, and transportation. Its contribution to GDP, spending on local goods and services, boosts personal income and wealth for residents, and to the higher tax revenues for local governments, which can be reinvested. Tourism is also positive because it can encourage investments in infrastructure and economic diversification. At the same time, is it possible to observe some negative effects too? Very often, the employment is only seasonal. The increasing demand and the consequent possible local prices inflation can make goods and services unaffordable for local residents. Last but not least, a significant portion of the revenue generated may leave the local economy. Is it possible to estimate the propagation of positive and negative effects of tourism on a specific economic system? Yes, it is. A study that incorporates Leontief's input output model is the one conducted by the UNWTO, referenced in the article The Measurement of Economic Impacts of Tourism. This article proposes a calculation of income variation resulting from producers' responses to tourist demand through various interconnected indicators. These indicators can be developed using tourism satellite accounting combined with other tools that analyze added value, employment, employee remuneration in the sector, gross business income, government revenues, and so on. It considers, first, the direct effects. That means only the calculation of immediate effects of tourist demand on production processes and the supply of goods and services, in terms of additional goods and services, added value, and its components. Second, the indirect effects. The chain of indirect effects which arises from the relationships between industries serving tourism and the other industries. Third, the induced effects. That means the effects generated when the increase in income distributed to the workforce and owners of productive capital leads to higher household consumption.